The ECB has to be careful if they start giving us a date on when they're thinking about, pulling back from this quantitative easing, that the market doesn't interpret it as an interest rate rise as well. How do they communicate that?
That's true, and I think there's also a task of communication around what they're going to do in terms of the reinvestment of the very, very large book that they have, and that will continue to feed into European bond markets for some time. To an extent, I don't think Mario Draghi will regard today's meeting as too onerous, in the sense that the dip in the data is actually, I think, welcome, perhaps takes the edge off inflation. The euro has dropped back momentarily. We've had a little rally in the dollar. We don't think it will continue. We are structurally negative on the dollar relative to the pound, the euro, the yen, and emerging market currencies. So we're having something of a respite for investors and exporters in Europe. And I think the underlying fundamentals in the European economy are pretty solid. It's just we've come off a very, very high point in January.
Max, do you believe that's it? That we've kind of reached, a peak economic growth for euro area and Germany?
I'm not quite sure about that, but I think what we have seen, obviously, is these economic surprises that were negative over the last couple of weeks. And I think that will have to be mentioned today, and that obviously, will probably catch some investors on the wrong foot. Because if you look at, CFTC positioning, for example, euro-dollar long positions have just reached another record high. And, as we've just heard, yes, it's come off a little bit, euro-dollar. But actually, I would say, over the next couple of weeks and months, probably the new range in euro-dollar is rather 115 to 120, because we're rather looking for inflation to be a little lower, particularly on the core side in the next couple of weeks. Probably over the summer, we'll have those positive base effects in energy prices that will push headline inflation higher. Right. But that's more of a global effect. That's more of a global, a global factor rather than a Eurozone-specific factor. Okay,
a Eurozone-specific factor. I mean, I guess it's a global factor too, but it's these trade tensions, right? How should Mario Draghi navigate them?
In a sense, he doesn't have to navigate them, because he and many European leaders can stand back and let the US and China lock horns. There is collateral damage, and specifically for Germany, because of the extent of car exports, etc., to China. I think on trade exports, and trade tension rather, it's a sensitive political issue, and I think he will stick to the view in terms of warning against a trade dispute, and probably use history, just the echo of history, to warn against that. But I think that's probably an issue he doesn't want to get into in too great detail.